I'm Sebastian Liddell. I'm the EVP of Enterprise for Ledger, and you're watching TE Stock.
Counting down to the close, today is Tuesday, March 24th, and you are watching Taking Stock. I'm Ashley Mastronardi, filling in for JD Durkin. Markets trying to continue the rally after a winning day yesterday. Markets a little flat as we end the day. Here to break it all down for us is Peter Tuchman from Einstein of Wall Street.
Yes,
so tell me, markets were optimistic that the Middle East conflict perhaps had a resolution. We're hearing today that the Pentagon is sending 3,000 troops to Iran. What do you think investors will take from that?
I think the market is not convinced that any of this stuff is, that the news we're getting is real. We had so many mixed messages with the news yesterday. Retraction, the president saying one thing and then Iran saying something else. And so I think the market is sort of sitting back. They're desperately trying to get green today just to follow through with yesterday's rally, but it doesn't have that oomph it needs to get going. So I think everyone's sort of sitting on the sidelines trying to wait for something that they can, sink their teeth into. We're not getting anything that's legitimate on the news side. So I think the people are just going to sit back and wait. They don't want to take a position on the long side or the short side because those who were short got snookered yesterday and those who were long got hurt the days before.
All right. Do you think we didn't we are actually going to go to the closing bell? It is time for Dana Incorporated to do the honors. Bruce McDonald, he is their chairman and CEO. An excited crowd here on the floor. That was Dana Incorporated doing the honors for the close. We're going to take a look at the major averages. The S&P down fractionally, the Dow down fractionally, the New York Stock Exchange Composite up about 0.25%, and the Russell 2000 again winning the race up about 0.5%. Joining me now is Katie Perry. She's not the singer, but she's the financial expert, CMO at Zero Hash. Katie, welcome to the New York Stock Exchange.
Hi, Ashley. It's so good to see you. I think I saw you in Vegas last time. It's good to be back in New York.
Yes, we were hanging out at CES.
Yes, feels like a lifetime ago.
So what is your takeaway from today's session? Markets really trying to continue the rally. We finished a little mixed, a little flat. Why do you think so?
Yeah, exactly what Peter was just saying. I think there's some disorientation between what's going on, what we're hearing from elected officials and people in charge, what the newspapers are reporting, and then what's right in front of us in the economy. So I think what he was saying, people sort of in wait and see mode. What they're saying is it's single variable market right now where everyone's just waiting to see what's going on in Iran and what's going to happen next, and a lot of sort of paralysis in that moment.
The Fed met last week. They did not, as expected, roll back interest rates. Do you think the Middle East conflict is going to have an impact on Fed policy moving forward? Do you see any cuts in 2026?
Yeah, I think in the near term, it's obviously affecting those energy prices, which has a direct impact on inflation. Things like food, transportation costs, that $19 sweet green salad might get even more expensive for people. The Fed is watching that closely. Obviously, they want to keep that balance in check and wait and see what's going on in energy, what's going on in the geopolitical landscape, and then looking to make a move. So I think that base case remains the same, but things could change as the situation continues to develop out in the Middle East.
All right, and you say that job market vibes are bad. Can you explain what you mean by that through the lens of the K-shaped economy?
Yeah, I saw a really interesting Gallup poll. 28% of Americans feel that this is a bad market to be looking for a job. And what's fascinating about that is go back to 2022, and it was 70% of people thought it was a good time to be in the job market. So it's completely flipped those two things. I think there's a lot of pessimism going on right now. And again, that K-shaped recovery, you have the top 10% of earners driving 50% of the spending. And when 70 or so percent of the GDP is tied to consumer spending, that's a lot of pressure on a small section of the population of those high earners driving the actual economic output.
All right, and a little bit out of the box for us, but you say the affordability crisis is impacting music. Can you break that down for us?
Yeah, I almost wore my cowboy boots for you because actually there's a lot of studies that show the popularity of folk music has direct ties to the economic viability of the country. If you look at the 30s, you had people like Pete Seeger. In the 40s, you had Bob Dylan. In the 60s, even 2008, Lumineers, Mumford and Sons had a resurgence. You look at kind of trending what's popular in music right now, Zach Bryan, Noah Kahan, Casey Musgraves. There's sort of a emergence back to folk, and I think there's a lot of studies that show that's a drive towards authenticity. And even for people who don't feel that impact, the vibe is sort of that recession aesthetic, and you're seeing that in art and culture.
Where else are we seeing that in art and culture?
I think in everything, when you see, especially the nostalgia that we're seeing towards the 90s in particular, is very fascinating. I think it's driven by a lot of millennials looking back to simpler times, perhaps more affordable times. I know even that's top of mind for Gen Z. Reuters and a company called A Starting Point actually has a sold-out town hall later this week just for Gen Z on the affordability crisis. So this is top of mind, not just for millennials, but the younger generations as well.
I can't let you go without asking about your new book, Ticker Shock. It is going to be available July 15th.
Yes.
What can we expect?
Yeah, so Ticker Shock's basically a look at what changes when the people investing don't necessarily look like everyone who's on the floor here today. There's people on Reddit who have the influence and the information to potentially move stock prices, and that really changes how companies react. It also goes into tokenization, which I know the New York Stock Exchange is making big moves there. My company as well, Zero Hash, is playing in that space. So from the lens of a publicly traded company, what are all the things that you need to change in the organization to meet the moment in the public markets? So it's available for pre-order now at tickershockbook.com, and you can have it in hand July 15th.
Can't wait to read it. Katie Perry, CMO at Zero Hash, thank you so much for joining
Thanks,
us. At the
Ashley.
New York
Always
Stock
good to
Exchange.
see you.
So good to see you. Okay, we are going to take a walk to the NYSE Notables, but first, the NCAA tournament is underway. Poly market predictions on which teams will win. 21% Michigan think Michigan will take it all. 20% think Arizona will win. 18% are betting on Duke, and 12% are betting on Houston. We are down to the Sweet 16. There are going to be some games on Thursday, and then by this weekend, they will be down to the final 8 teams. Now we are at the NYSE Notables. These are NYSE stocks that are standing out and popping today. First, we're going to look at Corning. Corning is up more than 8%. They unveiled AI optical products for data centers. Corning specializes in glass and floor optics, and they're now positioning themselves in the center of the AI build out. Wall Street is taking notice. Bank of America recently reaffirmed a buy, and they raised their price target, citing a multi-billion-dollar opportunity through the end of the decade. And then we're going to look at Peabody Energy. They're up almost 8% as we close the session, and they're putting gas and coal back in focus. Peabody is one of the world's largest coal miners, and they're getting a boost as oil and natural gas prices rise amid the Iran war, pushing utilities and countries to look for alternative energy sources like coal. And with energy markets under pressure and supply uncertainty rising, investors are betting Peabody could benefit from a resurgence in demand for traditional fuels. And next up, FinTech TV's Remy Blair caught up with Sean Bill of the Bitcoin Standard Treasury Company at the Digital Asset Summit 2026 here in New York City to discuss all things Bitcoin. Take a listen.
Joining me live at Digital Asset Summit 2026 is Sean Bill, CIO and co-founder at the Bitcoin Standard Treasury Company. Well, Sean, great to have you here. Thank you so much for joining me.
Thanks for having me, Remy. I'm glad we weren't doing this yesterday and amidst all the chaos.
Absolutely.
The market.
Yeah, and speaking of all these headlines coming through, we know that this is affecting all asset classes, whether we're talking about crypto, equities, or even commodities. So what do you make of the environment we're in right now?
Well, I think that, Bitcoin is subject to a 4-year cycle. And I think what we saw here with the highs in October and the lows in February, going from 126 down to, 70,000-ish, well, 60,000, roughly 100, was really driven by the 4-year cycle. And so we saw it kind of roll over, and then we saw kind of a second wave of retail selling. You saw it with the ETF flows, with the outflows going out of the ETF market. I think that we're now kind of in the bottoming zone for that. think that the market will find good support down there at 60,000. I don't think we'll take that low out. I think that the markets were very heavily oversold, and we've really started to see a divergence between Bitcoin and gold. So historically, that ratio can get down to about, it takes 10 ounces of gold to buy a Bitcoin is the low. The high could be much higher, but right now we're around 13. And it seems to be kind of coming out of that bottom and kind of diverging from gold, which is very interesting given all the events that we've had in the Middle East.
Hmm. Yeah, and Sean, you and I are here at Digital Asset Summit 2026. This is a 3-day event, and we'll be hearing from a lot of institutions as well as policymakers. So, what have you been hearing, and what are you most excited about as we head into the summit?
Well, I think that, what I'm really excited about is that we're starting to see more interest for institutional adoption of Bitcoin. And, in 2019, I was the first US public plan pension CIO to recommend an allocation to Bitcoin, recommended 1 to 3%. 5 years later, BlackRock came out with a 2% allocation. So we got some justification there. And I think that we're now seeing additional firms and banks now starting to say, okay, we can dip our toe into this space. We're seeing Morgan Stanley, we're seeing other large brokers come into the space that weren't there before. So that to me is something that could be a tremendous catalyst for the long-term price appreciation of Bitcoin. I don't think we've really seen them come in size yet. I think they're just getting set up for it.
Yeah, and you bring up an important point because you're no strangers to first, as you mentioned. So, given the current climate right now and institutional adoption, for viewers out there who are wondering how this will shake out and what it means for the retail investor in the long run, what would you say to them?
Well, I think that, Bitcoin has a low correlation to most other asset classes, and it has a very fat right tail for a positive skew, for positive upside results. So I think that, all investors should have some exposure to Bitcoin. And I think that that view is now catching on more with the retail crowd. And that's why you're seeing Morgan Stanley rolling out an ETF. Fidelity's been in the game for a while. We're hearing rumblings that Schwab is very excited about the space. So I think that you're going to see a broader adoption. I think, Bitcoin's a challenging class to own, directly, right? I mean, holding your keys, your private key, your public key makes some people nervous. Having the adoption of ETFs really opened up the playing field and enabled other participants that might otherwise not be comfortable coming into Bitcoin come in. So there is a little blowback on paper Bitcoin ETFs, but we actually think it's a really positive thing. We think that it really broadens the adoption, and our mission at the Bitcoin Standard Treasury Company is really to be a catalyst to really promote the adoption of Bitcoin.
Yeah, and Sean, as we look ahead, we are only in Q1 2026, which is hard to believe given everything we've seen so far. But in terms of plans for your organization going public, can you give us a sneak peek?
Yeah. So when we originally founded the company, Adam Back and myself, and Adam, of course, is the inventor of Hashcash, which is the proof of work algorithm that secures the Bitcoin network. So no proof of work, no Bitcoin. And that was released 10 years before Bitcoin came out. And then myself being one of the first institutional investors to ever get exposure to Bitcoin, our mission really has been really to try to drive the financialization of Bitcoin. So what we did is we came to Wall Street. Our founding team showed up with 25,000 Bitcoin as an initial contribution to seed the company. That got out. The OG Bitcoiners wanted to participate. We raised another 5,021 Bitcoin from friends and family, if you will. And that was the first ever Bitcoin in kind equity pipe done in the United States. That was done by Cantor. And so on top of that, we then went out and raised a fiat pipe, and we raised 400 million on common equity, 300 million on the preferred convertible stock, which priced at a slight discount, so 255 net to us. And then we did a convertible note, 575 million there. And so that fundraise was around 1.4 billion, which was at the time the largest for any SPAC treasury, more than 2.1 times the size of the next biggest.
Well, Sean, hopefully we have you back at the New York Stock Exchange the next time you're in town. So thank you so much for joining us and thank you so much for sharing your perspective.
Yeah, thank you for having me.
Joining us now is Xiao Zhu, president at Jupiter, a DeFi super app that has processed over $2 trillion in volume and is now moving into institutional grade lending and stablecoins. Welcome to Taking Stock.
Thank you. Excited to be here.
So what are you doing at Jupiter?
I'm the president of Jupiter. Jupiter is very much today the largest on-chain super app. It is on the Solana blockchain. It is the largest full-stack financial platform on Solana. We processed last year over $1 trillion of on-chain trading volume, and we have over 18 products now spanning, trading, perpetuals, stablecoins, lending and borrowing, looping as well as payments now. We're very excited about sort of the intersections between on-chain finance and everyday finance.
Talk more about that intersection between on-chain finance and traditional finance.
Yeah.
I think with Genius and Clarity, we're seeing more adoption in the traditional finance space. What are you seeing?
Yeah, absolutely. I mean, there's like multiple angles, right? The first one is obviously the stablecoin angle, right? Very much as a bridge. It's essentially a tokenized version of the US dollar. And it really bridges both the digital assets trading side of things, but then also actually more and more empower remittances and cross-border payments and also everyday payments. So we recently launched Jupiter Global, which is essentially our on-chain payment stack, which allows our on-chain users to now also load up their stable coins so they can actually pay via a Visa card or QR pay everywhere in the world, like for actually their everyday utilities or like bills. And that is what we're really excited about, right? On-chain really started out as sort of this, where you could have, trade different digital assets, right, crypto assets, but more and more now you can also use them actually for your everyday financial utility. And I would say the second intersection is also very important, which is the tokenization of real world assets, right? Because crypto started with Bitcoin and Ethereum, they are purely digital assets, but now you also can have tokenized versions of, for example, commodities or stocks actually. And once these kind of tokenized assets are on a blockchain, they can be actually traded 24/7, right? As long as there's liquidity against that. And so we've seen that very interestingly, during the Iran war now, where during the weekend, right, oil prices spiked or certain other assets really moved. Traditional markets were closed, so traders couldn't actually express their, views on the market in traditional markets, but on-chain markets were fully open during the weekend, and so a lot of trading volumes actually came on-chain, and this is just one of the examples of why we believe that on-chain markets are simply the next, leg of the evolution of financial markets.
For someone who's just learning about the digital asset space, what does it mean to be on-chain?
Well, it means that you are participating on the blockchain in a financial system that is self-custodial. That means Jupiter as a wallet does not actually take custody of customer funds, unlike banks or centralized exchanges. The blockchain is also 24/7 and is globally accessible. And I think through the recent developments of on-chain technology, on-chain finance really developed to a stage where it is really almost instantly, right? On a Solana blockchain, you can settle in less than 1 second any amount of financial value, and the costs are extremely low. So really, we believe it's a better version of the capital markets going forward, which is purely digital and purely on-chain.
All right, thank you so much for joining us on Taking Stock, and we are going to go to break. More Taking Stock when we come back. Welcome back to Taking Stock. I'm joined by Fabio Giantonio and Franco Morbidelli from the Pertamina Enduro VR46 racing team. Welcome to Taking Stock.
Hello, everybody. Thank you for your warm welcome.
So, Fabio, you just had a podium finish in Brazil. How do you carry that technical confidence into a race track as physically demanding as COTA in Austin, Texas?
Yeah, we did an amazing job in Brazil. We've done a couple podiums and a pole position there, so for sure it's been an amazing weekend. Then this is already a great vibe to carry into another race weekend. And then for sure having these days here in New York and visiting so many great places like it is here gives you extra motivation to arrive in another weekend and try to push.
All right, and Franco, tell us about the sport. How did you get involved in MotoGP?
Well, I started when I was a little kid as a passion. My father was a mechanic and he put me on a small motorcycle when I was 2.5 years, and we started racing and together till arriving in the World Championship now. And yeah, it's been quite a long journey made by passion, a lot of work, some injuries as well, but a really fun ride.
A lot of practice?
As well, yeah.
Yeah, what is your practice schedule like?
Well, it's quite busy, but it's nice. A couple of times a week we get to ride the motorcycles. That's the fun part. That's the part where the adrenaline gets higher, and it really is where our sports revolves around. So it's very nice, that part of a training, but also, you know, the grinding in the gym and some running. It's quite tough. Yeah.
And I understand you both drive for Valentino Rossi. He is described as the GOAT. What is that experience like, Fabio?
Yeah, well, for sure racing for his team is something amazing, you know. I'm super proud of it. It's like he's the GOAT because he has won most of everyone, like most wins, most championships, and he's just the best ever. So having him as a boss and as a mentor, as a kind of friend that you can text him and ask him a lot of advice is a huge moment, a proud moment for me, but also a huge opportunity to grow and improve in what you do. So yeah, that's amazing.
Do you mentor anyone?
What? Sorry?
Do you mentor anyone? Do you help
Well,
you know, drivers that are just coming up?
I try somehow with my manager. We try to help some little kids, but for sure I'm not in the position of Val at the moment. That Valentino is much more higher than me.
All right, and this course that we were talking about in Austin, Texas, what is the most technical part of it, and what are the challenges of it?
Definitely Sector 1 in COTA is one of the most technicals in the world, and it's unique. It's full of direction changes, and there are many corners one after the other, and it's really difficult to interpret it. And yeah, but Fabio is really quick in that sector, so definitely we will try to learn from him. And then speaking about the track itself, it's amazing. It's typical American style, very long, wide, full of corners. I really like to be there.
All right, Fabio Giantonio and Franco Morbidelli from the Pertamina Enduro VR46
Yeah.
racing team. Thank you so much for joining
Thank
us at Taking Stock. We are going to go to break and we'll be right back. Welcome back to Taking Stock. First, the crypto majors of Bitcoin, Ether, and Solana pairing Monday gains. They're all down more than 1.5% on the day. And next up, a new bipartisan bill is seeking to ban sports-style contracts on prediction markets as Kalshi and Polymarket move to tighten rules around insider trading amid growing regulatory pressure. And finally, Jeff Bezos' Blue Origin is taking AI to orbit. It's seeking approval for a massive 50,000 satellite network designed to run data centers in space. And now Money 2020's Scarlett Sieber is back with Jargon Translator. It's putting fintech terminology into language that anyone can understand. Take a look.
Welcome back. I am Scarlett Sieber from Money 2020, and this is Jargon Translator, where we break down the finance terms that sound fancy but actually change the game. Today's word, tokenization. No, it's not about arcade tokens, although those are pretty cool and I like my arcade games. It's actually about flipping finance on its head. Imagine owning a piece of a Picasso or a skyscraper instead of the whole thing. That's tokenization. It's the process of turning real-world assets into digital tokens on the blockchain. Why is this a big deal? Because it makes expensive stuff accessible. Instead of needing $10 million for a building, you can buy a fraction for $100. It's like splitting the check at brunch, but for real estate, art, and even stocks. Tokenization also makes trading faster and more transparent. No middlemen, no paperwork, just blockchain receipts, baby. But here's the catch. Regulation hasn't fully caught up. So while the tech is fire, we know that, the legal side is still loading. So next time you hear about tokenization, remember, it's not about arcade tokens. It's about democratizing ownership. That is your jargon translated. Back over to you.
That's going to do it for Taking Stock. We are about 30 minutes after the close. The S&P down fractionally, the Dow down fractionally, the New York Stock Exchange Composite up more than 0.25%, and the Russell 2000 up 0.4%. Of course, markets reacting to oil prices. ICE Brent crude was down yesterday below 100, and then it is up now over 103. Markets yesterday had a winning day. They were hopeful that the war in Iran would have an end in sight, but that remains to be unseen. Catch NYSE Live tomorrow morning. I will be hosting, counting you down to the bell. That is going to do it for the show. We will see you tomorrow on Taking Stock.